The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
Welcome to the Accunet Mortgage and Realty Show. I'm David Wickert, Chief Millennial Loan Consultant. Joining me again this morning, loan consultant Tim Holdman. Good morning, Tim.
Good morning, David.
If you have a question or a comment, you can call or text us on the Accunet Mortgage Talk and Text line. That number 414-799-1620. Another Sunday of good stories. Our lineup, one story of someone who quit their job right before closing to become a part-time bus driver.
Is that a problem?
We're going to review.
We'll talk about it.
Also on the agenda today, talking about a business loan against someone's home, collateralized against someone's home. Another doctor moving from out of state and how we can or maybe can't help, along with a conversation about some reverse mortgages and VA, Veterans Affairs mortgages as well. So
sounds like some good variety.
Yes. I would like, however, to begin today with the prognosticators over at Fannie Mae. Every month, as far as I can read, Fannie Mae comes out with their housing forecast. That any of us as the owners of Fannie Mae, because never forget, as taxpayers, you, me, and all listeners are owners of Fannie Mae after
Correct.
taking them into conservatorship more than 10 years ago. Woohoo! You can go look at what Fannie Mae thinks is going to happen to the housing world. They go out about 6 quarters, so about a year and a half. And what Fannie Mae is predicting here as we kind of wrap up 2019 is that for most of 2020, they think that interest rates are going to remain favorable.
Yeah,
which
flat
is
or a little bit down.
Yes,
even.
they are predicting that in total for 2020, they think the 30-year fixed rate mortgage is going to hover around 3.6.
Pretty good.
Which is music to our ears, being in the mortgage business. But I think as we were getting prepared for today's show, we enjoyed going back to what Fannie Mae had predicted 1 year ago today, because I enjoy that they get to enjoy the revisionist history of here's what we think it'll be, but then once it happens, we gave it our best shot.
We did our best, but we were wrong.
But we were wrong. So this time last year, all of the smartest minds at Fannie Mae were predicting that interest rates, like the 30-year fixed rate, was going to hover at about 4.8%. 4.8. Yes. That was their October of 2018 prediction. And then in November of 2018, so a year ago, they were predicting that full on for all of 2020, they thought the 30-year fixed rate was going to hover around 5.
5% was going to be the new normal. And that's what I remember having this conversation
I was
with
bracing
borrowers,
myself.
David. Yeah, like, hey, 5%, get ready for it. It's going to be, an adjustment. But, hey, historically speaking, it's still a really good rate, trying to, polish that turd a little bit, so to speak.
Exactly. And so, as we note week in and week out, interest rate is not the thing that's going to get in the way of someone who wants to buy a home.
Correct.
Because people buy homes for personal reasons. But what we've enjoyed here, I think for much, if not all of 2019, is most 30-year fixed loans hanging on to a 3 handle, which just, it's like paying less for gas at the pump. You're just like,
feels good.
Man, that feels good to fill up my tank and not have to pay so much to get from point A to point B. So,
especially after, expecting per Fannie's prediction last year that rates were going to be basically a full % higher than they actually were in reality for this year.
And so what I want to remind folks is that nobody knows anything.
Correct.
If I knew, if Tim knew, if Brian knew, if smart folks at Fannie Mae knew which way interest rates were going to move on such a macro basis, I would already be a billionaire and own several islands in the Caribbean. And so we're all about helping people plan regardless of what the interest rate world might look like. But let's give at least a little snapshot of what the world looks like today. So Thankfully, we have been able to hang on to 3.99% on a 30-year fix with 25% equity and all the other right stuff. That would just be with $495 of cost. The APR is 4.02.
And just to remind people out there, that David is quoting total loan cost. So that's not $490 of Accunet's origination fees, because we have none. That is total cost, including appraisal, title, closing fees, all that good stuff.
And it's not that I don't want the United States to figure out the trade war thing. It's just there was this additional uncertainty, kind of this like Western movie standoff that's still going on between China and the Trump administration, where they've like said they've come to an agreement, but they don't really know the guts of the agreement yet. And so that has been favorable to interest rates this week. And so we've been able to hang on to a 3 handle on most of the loans that we're creating this week. So still an opportunity. And in light of what the world looked like this time last year, man, we're down a full percent. That is savings that you weren't even expecting as a home shopper or a home owner. So,
So as a reminder, if you got a mortgage sometime last year and haven't refinanced yet, you probably are in the money to get
and let's take a look
rate.
at least.
Yeah.
So
happy to take a look.
All right, when we come back from this first break, we're going to tell a story about a guy who switched jobs and didn't tell us, but there might be a light at the end of this tunnel. You are listening to the Accunet Mortgage and Realty Show on WTMJ.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Hello.
And we're going to transition into a story here on this segment for someone buying a home. And Tim, I know this is your story, but let me see if I can tee this up. Someone buying a home had been working at their previous employer for 9 some years. And we are redundant in the themes that we talk about here at Accunet, such as the details matter. And for this guy, had been working third shift and had decided, without telling us, that he was going to be leaving his job that we had been using at the beginning of the process. Hey, congratulations on your accepted offer. Remind me again where you're working. Oh, I'm working at ABC, whatever. Awesome. Some odd weeks later, as a standard protocol at Accunet, we do what's called a verbal verification of employment, where we pick up the phone and say, hello, my name is Sue calling from Accunet Mortgage. I am calling just to make sure that Billy is still working at ABC Company. And Tim, let's go further down the rabbit hole on the response to that said phone call.
And they said the thing that we never want to hear them say, which is, oh, no, he stopped working here 3 weeks ago.
What?
And, yeah, our reaction was, come again?
Yes.
So it turns out they were not joking. He had stopped working there, did not tell anyone at Accunet about it. And, as a matter of practice, like you mentioned, David, we do this final employment check, just a quick verbal check, usually a couple days before closing, because the whole point is we want to make sure that the income we use to qualify someone for the mortgage through underwriting, that's income is still happening at the time they actually sign on the dotted line.
Correct.
And get the big bag of money called a mortgage. So I immediately called him up, and
was this like a week before they were set to close?
5 days.
Okay.
Yeah, 5 business days. So we had a little bit of time to see if we can pull the rabbit out of the hat. So, like you had mentioned, I mean the real life basically struggle of working third shift for 9 years had taken a toll on the guy. He had started looking without telling anybody, and then he had been offered a job that he just couldn't say no to. And he told me, he was up front and said, "I realize this might put me getting this condo in jeopardy."
Yeah.
And specifically, the reason that might be a problem for his situation is that the new position is not a guaranteed full-time position right out of the gate. He has to go through a training period of a couple months, and while he's in this training period, he's working full-time hours, but he's not really considered a permanent employee yet until he can get through that training phase.
Gotcha.
Which makes
kind
sense.
of outside of the box of what counts as a job that you can use to qualify.
Exactly.
You're in training. Hey, what if training goes sideways, for example?
Right, and that's a common sense, I guess, way to look at it. If you look at it from an underwriter's perspective, they're like, yeah, how can I use income if, what if he doesn't do well in training? He just started this job. What if he gets
What if
fired
training
in a
gets
month?
extended?
Yeah, exactly. So the realtor had a great suggestion, and it's going to look like cooler heads are going to prevail, but we'll definitely keep you posted on this story in the coming weeks here. What they suggest is that the seller had literally already moved out of the condo. She had found another place, and she didn't want to run the risk of putting this thing back on the market and
starting from scratch,
starting
all
right
over
from
again.
the drawing board. So the idea was maybe the seller rents to our borrowers for as long as it takes, maybe a couple weeks, couple months, whatever, until he passes through the training program, is full-time.
Because there's every expectation that his new job is going to be his job.
And he wasn't a
and
job
it's all
hopper.
gonna be okay.
Worked at his previous job for 9 years, so had a really strong, history of employment in the same line of work. So the new job is not anything new to him as far as the type of work itself.
Oh, okay.
So there's a lot of positives.
We're just kind of in this like odd in between. At the same time, that's like you would like a big bag of money called a mortgage.
Right,
like that
right.
would make anybody nervous.
So everyone's on the same page. We're waiting to see if underwriting is going to sign off on the income source that he's getting right now, even if it's not technically a permanent full-time source of income. If they don't sign off on it, which frankly we're expecting that they won't, that's where we talk about, all right, are we going to allow these people to move in, rent to the current owner of the home for a couple months until he, gets to that full-time status, and then we close the mortgage, in January.
Yeah, maybe in a month or two. I'm glad it heartens me that the seller has a pinch of common sense. Because, why would you want to have to start all over? You kind of... Right. You know what you're dealing with. You know the hand that you've been dealt with a particular buyer. And so I think this is a case of good real estate agent work.
Absolutely.
And the whole team collaborating together, because it's like, wouldn't it be worth a couple conversations to try to keep this whole plan still together rather than, I don't know, spike the football here as we're sitting outside the 5-yard line?
Yeah, and the seller will get a couple months of rental income, which never hurt anybody. And I think the buyers will just be happy to maybe know that they can still buy this house even after. I mean, literally one of the disclosures we have our borrowers sign at the time of application, it says right on there, do not change jobs. I mean, it's it's something we make known right from day one. So they.
But I get it for this guy on a human level. He's just like it was bearing down on his soul.
They're appreciating us trying to adjust the game plan to see if we can still make it happen.
Okay, well, I'm going to be interested to see and hear if we get this one into the end zone. I think we will. Yeah, absolutely. So, all right, when we come back from this break, I would like to talk about a business loan and how that might get in the way of helping someone refinance their home. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back to the Accunet Mortgage and Realty Show. Good start to everything. Forecasting by Fannie Mae and a conversation about, I think, someone who wanted to leave their gig and go on to their next opportunity. I think we'll be able to still help those folks. But I wanted to get into a conversation about a business loan. And as is, apparently this is the standard protocol show here this Sunday morning. But when Accunet is putting together a new mortgage, this is a refinance in particular, we have the title company go and do a search to be like, hello, county recorder's office of the, where the home is located. Can you please tell us what is on file for any borrowed money or liens that are on this home that we would like to collateralize for our new mortgage? And so we were working with a couple who we got that title report back. And lo and behold, we saw three things. The first was their original first mortgage, expected. The second item was their second mortgage, also expected. But then we saw the third item that was listed as a lien against their home, and that was a multi-million-dollar business loan from way back in 2012, which is not something you see every day.
And it should be noted that this is not a multi-million-dollar home.
Right. This is a less than $1 million home with a multi-million-dollar
business
original business loan on it.
Yeah.
And So, boy, that's interesting.
Yeah.
Call 1-800 borrower client and say, hello, can you please tell us about...
We didn't know about this.
Yeah, this didn't really come up in conversation. What is the circumstances of this loan? Because, hey, it's been like more than a handful of years. We only know what the original amount was. Can you please tell us what the remaining balance is that I'm guessing, boy, I hope there is still a business associated with this borrowed money that's probably been paying back this business loan over these last couple of years. And I think, Tim, their response was, oh, yeah, we've paid it down like 70%.
Yeah, it was no longer a multi-million-dollar loan, but it was still pretty sizable.
Sizable six-figure loan.
Yeah, so still eating up almost all of the, equity in the home if that loan were to stay on there as collateral against the property.
So in terms, as we have noted in some previous weeks, the make sense lending portion of things doesn't always fit in our mortgage manufacturing box.
It can get in the way.
Yeah, and so, for these folks, it's like, well, yeah, I understand it's, collateralized against our house, but our business has been paying back this loan for, the past couple years, and they just collateralized our house because they did, and hey, we're going to have it paid off in the next, year. And what mortgage lenders fear is when we go to refinance your old loan, we literally pay off the first and the second mortgage in these folks' examples. Because we want to put a new first mortgage together.
Right.
Well, when you pay off the first and the second, the guy who is third in line suddenly becomes in first position. And so two things. One, you would have to ask, if not beg, for permission to put, hi, we just paid off those first two. We'd like to put a new mortgage ahead of you. I know you just went into first place, but we'd like you to slide back into second place so that we can put our new mortgage on your property. So you'd have to get permission from the business loan folks to do that. But the second thing is, the new mortgage that we're going to give you, plus what you owe on your business loan, is still more borrowed money than the total value of your home.
Right.
Which no lender, big or small, really wants to lend out money greater than the collateral that they might have to take back from you to sell
if you can't
make
make
good
on
on what they lent you.
Exactly.
Which is I know that's kind of wonky, but the only way forward is if, hey, bank, credit union that's holding on to this business loan, would you be willing to release the house as your collateral and just be like, I don't know what the number was. Let's say it was $300,000 on this business loan. Hey, you know what? We'll release, your home from being collateral because we think you're still going to get us our $300,000 back as the bank. And we're not so worried anymore because it's not a multi-million-dollar figure anymore. It's less, although $300,000 is still a chunk of change.
Yeah.
But the bank that gives the loan, they don't have to do that.
They don't.
They can just be like, nah, I still want to be able to come after your house in case you stop paying me on this business loan.
Right.
And I think, Tim, you had begun conversations with the banker to understand, like, is this an option? Are you guys, are you utterly allergic to this?
We're playing phone tag at the moment, but that's really our kind of only path forward immediately is to have that bank release the house as collateral for the business loan, maybe taking into consideration all those good factors, like it is going to get paid off in a year and a half. It is already a much smaller balance than it was when they originally took out the loan, those kinds of things. So we'll see, but due to the fact that you mentioned, like our mortgage plus the remaining balance on the business loan, those two things together exceed the total value of the house that we're lending off of. So it's kind of a non-starter, even if the business loan bank does agree to subordinate their loan and stay in second position behind our new first mortgage.
Yeah. So as always, details matter in mortgage lending. If you have a business loan, bring it up. because it's going to get brought up one way or another. So, all right, when we come back, I would like to have another conversation about another doctor moving from out of state here to the Milwaukee area. When we come back, you're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
You're listening to the Accunet Mortgage and Realty Show here this Sunday morning. I am David. That is Tim over yonder.
Good morning.
And why do I feel like we've had this string of people moving from out of state? Welcome and coming back to Milwaukee, and
better than the other way, I guess.
Yeah, well, then we wouldn't be helping them at all. But yeah, so another story similar to physicians or medical professionals that we've been helping in previous weeks. Tim, this is your client who's coming from Virginia. Works for the military. Did work for the military.
He's an anesthesiologist at a. I think a VA hospital or some, it's within the Navy.
But sounds like negotiating a new position contract in the private sector, as they call it.
Yep,
back here in
retiring,
Milwaukee.
quote unquote, from the military. I mean, he's not he's a younger guy, but for military, I guess he's
sure
old and wants to go to the private sector, and that involves moving back to the Milwaukee area, which he's originally from.
And so, to review and recap, in 2019 and in 2020, Accunet can help someone use income from a job that you haven't even started yet.
As long as they meet a couple very key criteria.
Super duper important criteria. One, you have to start the job within 90 days of when you close. In order to count as future income. Furthermore, we can only use the base salary portion of your job offer. And your job
no
offer...
bonuses, no overtime,
can't use
commission.
any or incentives or anything like that. And you have to clear any of the conditions of your employment. Drug test, licensing in this particular case.
Important for medical professionals, especially. Make sure you are licensed to practice in the state that you are taking the job in.
And so... I overheard your conversation with this borrower, and I think he was just trying to learn a lot about, how do, again, in the realm of makes sense. It's like, dude, I am about to move to Milwaukee, and I'm going to be making plenty of money upon my arrival. You really do want to give me a mortgage.
Yeah, makes a ton of money now, will be making a ton of money in the future. I mean, this is one of those make sense things where the guy and it was an innocent question. He's just like, no other lender I've ever talked to has brought up this potential issue.
That is my favorite.
Of, why you're asking about this new job. And I said, well, yeah, because when you think about it, I can't use income from a job in Virginia when you
are leaving.
When you were telling me you were going to buy a house and move to Wisconsin and live there, you're not going to be able to.
It's not going to pass the smell test.
Exactly. So we need to have some other income to point to, which luckily he is going to.
Well, and I think from a timing perspective, this has been a little bit of a slow roll, if only because it sounds like their life intention was, we're going to get back to Milwaukee one way or another. But I think now that they are coming into town to see a house, perhaps his negotiations about his new job are going to accelerate as well, because we have to be able to point to that next gig. I think you had told me that they are renting back home, so they don't have a home to sell.
Yeah, they have they rent in Virginia, so no property to offload, which is going to be very helpful, and also make them a desirable buyer, frankly. No home sale contingency of any kind, and they're strong borrowers in almost every sense of the word, and it's really been about them finding the right property. So they're coming into town this weekend to see the property in person that they've only seen online up to this point. And who knows, it might be the right one. It might not be. Originally, we had not spoken since, I think, May of this past year.
Oh, wow. Okay, so I wasn't kidding about the slow burn thing.
And, originally he said, hey, Tim, appreciate all the consulting you've done. We're probably not going to really ramp up the house hunt until maybe March of 2020, which was kind of their original time frame of when they were going to be looking to move back anyways. But oddly enough, sometimes when the right house comes up,
I was just going to say that.
It accelerates the game plan a little bit, which is fine. We're flexible. We're fluid. So,
and we're capable of moving at the same speed as a borrower.
Absolutely, yeah.
What I'm not nervous, but what I want to hopefully see come together. We don't control the employer,
right,
and neither does the borrower, and so hopefully everybody can be
luckily
moving swiftly together. It's just like we would love to give you a loan, but there has to be a job that
he's going to be on board, and I think he's a specialist in his field. He's not a burger flipper, he's got nothing. Hey, I
nothing
enjoy
against
a good burger.
Flippers, though. Didn't you make pizzas back in the day?
First job. Yeah. Anyways, no, I think he's in demand enough to where his future employer will work with him, I think, to fine-tune what he needs in order to, make a smooth move over here and get the house that he wants. So, we're at the very beginning. Who knows? They might see the house this weekend, and it might not even be the right one. But
it's just funny how you find the right house. It's like getting married. It's like you meet the right person. It's like, hello, would you like to marriage with me, please?
Yeah.
So I like that with a house sometimes.
Yes.
When we come back from this break, I would like to talk about VA loans, and we are going to strut our stuff when it comes to the nation's largest lender, the ones you can't escape during football games over the weekend by any means. So you are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Welcome back. We're almost done here, Tim, but we got a couple more stories to share. I wanted to, strut our stuff here at Accunet Mortgage because Tim's got a tale and then I've got a tale as well about customers are just like, wait, I inquired with Schmicken, the guys with the rocket, and their closing costs were so astronomically higher than what you guys are offering. Like,
How can that be?
I think it's disbelief is the word or the mood in people's voices. Just like, I almost don't believe you.
The common adage, if something seems too good to be true, it usually is. And I abide by that myself. So I get it. I'm not offended by the question at all.
And so on your particular conversation, Tim, you were doing something called a VA IRL, an interest rate reduction refinance loan through the Veterans Affairs Department, which for anyone who has served in the armed forces, first, thank you. And second, you can get a VA loan, and the IRL allows you to just refinance your current VA loan with another VA loan and is more streamlined. It's kind of the
you call it the fog this mirror loan. It's really
and lenders like Accunet and everybody else are just like, I'd be absolutely more than happy to help you with that VA loan. And so your conversation with this particular borrower, I think they were in disbelief. They was like, wait, no, they were going to charge me my arm and my leg and half of my right, pinky to get this loan.
And we're just charging the pinky, or not, maybe not even that. So. Yeah, this guy had connected and actually was already well into the process with Schmicken by the time we had connected with him, to the point where Schmicken had given him an official loan estimate, which is a great document because it's a standardized format.
That is the truth.
It has to look the same from every lender, so it's great. If you're really a serious shopper, you want to get the official loan estimate from whatever lenders you're considering. Yeah. So he'd gotten that from the Rocket guys already. Luckily, he was an avid radio listener, listened to Brian all the time, and Brian had built up that trust through the radio waves without even speaking to him, so he connected with me. I walked him through the loan estimate from the Rocket guys, and basically better than the loan officer from that company did it, because he said, Tim, I'm confused. This guy is saying they're going to cover all my costs, but the numbers just aren't flushing out that way on the loan estimate. I said, well, let's take a look. And it turned out he was exactly
right. That's why they
call
call you a loan consultant, Tim, not just a loan
absolutely
maker.
I always like consulting, and I like nerding out on mortgage numbers more than most things.
That's good.
Yeah, so we did the math, and it turned out, he was ended up bringing several $1,000s to the closing table and was not going to he was going to have to pay a lot of costs. And there were some other odd things, with the IRL product. Accunet doesn't need an appraisal done for that home.
Right.
This other company was saying an appraisal needed to be done and charging this guy a deposit to do said appraisal. So certain things just didn't add up. Ultimately, what it came down to is that we were able to get this gentleman an 8% lower rate than the other company.
I hear that's better.
As well as cheaper loan costs and no cash at closing, which I am disclosing on my loan estimate. The loan estimate from the other guys had him bringing $3,800 to the closing table. And I said, hey,
lower rate, lower costs, and nothing out of pocket.
Yeah,
that is the triumvirate of wins.
Yeah, and I mean, I could say whatever I want until I'm blue in the face, but the loan estimate doesn't lie. If this other company is disclosing on that official document that he has to bring $3,800 to the closing table, whatever they say kind of doesn't matter.
Right. I hear the words you're saying. Yeah, I can tell you're lying because your mouth is moving, kind of thing.
Right. So it was a good way to prove that we are experts at what we do, and
we can describe someone else's disclosures better than they can.
Yeah, and to your point, the disbelief that this guy has, like, how are you so much better? Well, we're not paying for Super Bowl ads. We're not paying to sponsor every college football and basketball game
every time, and the mascots that go with them.
I can't get a tank of gas without seeing a commercial from the Rocket guys, and all that cost definitely adds up. And I mean,
someone is going to pay for it.
Yeah, and ultimately it comes down to the customer paying for it in terms of the overall cost of the mortgage. So
I got that same question when I walked into a closing to say thank you for someone's business, and the answer was that simple. We are a company of 30 some odd folks out in Waukesha, and we do a radio show, but other than that, we're not really burning money on baseball, football. Maybe they sponsor hockey. I don't know, watch enough hockey, but I'm sure they're on there as well.
Naming arenas and all that.
And golf tournaments as well.
That's right.
All good things. All right. When we come back from this last break, I am going to tell you and our listeners a story that of a conversation I had with a real estate agent who was trying nicely to help educate their clients because this client was fixated on a reverse mortgage. And my attempt to coach up the real estate agent and ultimately try to get them to be like, please have them call me directly because I am going to speak to them some truths about reverse mortgages and maybe try to interpret what they have in mind. So that story when we come back from this last break. You are listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Weckert on WTMJ.
Welcome to the last segment of the Accunet Mortgage and Realty Show. I'm David. That's Tim.
Hello, hello.
And I'm going to wrap things up with a conversation about a conversation I had with a real estate agent. And what's interesting when you kind of sit on the front lines is you begin a conversation with a future borrower, home shopper, and there are words that mean other words. Like when someone calls into Accunet and says, hey, do you guys do FHA? Our answer is, yes, we do. But I have a feeling that that's kind of just the opening, like, help me, I'm a first-time home buyer, and I just know this acronym. Same thing goes when
WIDA.
folks call in and say,
want that WIDA
hey,
loan.
do you guys, I want that WIDA loan. It's just like, absolutely, we do the WIDA loan. Let's dive into some details,
Talk
though.
about why you're asking about it.
It's just it's like code word for I am a home shopper. Please help me.
Yep.
And so the conversation I had with this real estate agent was they have some clients moving to Milwaukee from out of state, Las Vegas.
They're moving from Vegas
to Milwaukee, which anyway,
Wow.
If it's right about now, I don't get that, but. Yeah. Hey, they have sold their home. They have $200,000 of proceeds, cash, burning a hole in their pocket. And what the real estate agent relayed to me was they want to come to Wisconsin, buy a $300,000 home, put $200,000 down and get a reverse mortgage. To which I muted my phone and took a large sip of coffee and
Here we go.
And continued the conversation because That don't make no sense.
And real quick for our listeners, David, I mean, just give the really high-level explanation. What is a reverse mortgage? Because I hear that term all the time.
Of course.
I'm not an expert on it
famously made public or advertised by Fred Thompson, who was the senator and TV guy from Law and Order.
Oh,
anyway,
okay.
You know what I'm talking about?
I know what you're talking about, yeah.
So a reverse mortgage is a home equity conversion mortgage, a HECM, that is under the auspices of HUD, or better known as the federal government, that allows those of a certain age and or older to convert the equity in their home into payments to themselves. You are just getting the equity in your home without having to sell it. And to summarize it, it's a bad deal because you pay a lot of interest and you burn up all the equity, literally paying interest to the federal government, which I could not find for you, the Midwesterner, who would be like, you know what I would like to do? Pay interest to the feds. And so, what this real estate agent was relaying about their customer was like, hey, we're going to, basically, if they actually went through, I think, with what they have in mind, we're going to buy this $300,000 house. We're going to put $200,000 down. We will have a $100,000 reverse mortgage that will then start to pay, then start to pay us our own money back.
The money you just put down.
Just put down, but at an interest rate. You're currently paying 0% interest in the checking account, where all your proceeds are. And now you're going to bury it in the 2x4s of the house and pay interest in order to receive it back as part of a reverse mortgage.
Not receive interest, pay interest.
Pay interest. You're going to get money, but for every dollar you get, it's probably 10 cents tacked on in expense.
Yeah, you're going to get $1 back, math. But the loan is going to increase by $1.10.
Sure, to keep the math simple. Yeah. And so what I'm hoping is perhaps sometime this coming week, I might be able to hop on the phone with the borrower to dig deeper into, when you say reverse mortgage, what do you mean?
Right.
Because
what is your goal, actually?
Is it you are retired or near retirement, and boy, you just can't sleep at night if you have a mortgage? Then I'm going to be like, yeah, pour every nickel you got into buying a home, pay cash so that, no matter what, you don't have to worry about a mortgage payment. Or on the other end of that spectrum, as Dad points out a lot, why don't you put only $100,000 down? And with the money that's left over, can your financial advisor earn you a rate of return greater than the cost of the borrowed money? And so, hey, if you borrow the money at 3.5%, can your investment advisor get you 4.5% or 5.5% on the money that's not buried in the 2x4s of your home, illiquid? Does that maybe strike a happy medium between this word you use called reverse mortgage versus hey, God forbid you want to improve the home. You know what that requires? Money.
And the other thing too, in my limited talks with people who have asked about reverse mortgages, I think cash flow is the thing that they are really concerned about.
Income.
So, literally, to your point, keep $100,000 just sitting in your savings account.
You can just look at it.
You're not going to gain a lot of interest on it, but then you have it to help supplement whatever your fixed income is.
Right, whatever that retirement income might be. So I appreciated the call from the real estate agent because she wants to help her client, and I think it's our job to interpret. I know you're saying these words, and maybe you actually absolutely mean what you're saying.
Right.
But I think there's the opportunity for more conversation around what you've got in mind, what makes you most comfortable. So if anyone out there listening would like to get started with a rock-solid pre-approval, because the first of the year is going to coming right around the bend, and home shopping season will start anew, or while we are still holding on to low rates, all you have to do is click on the blue button at Accunet.com. That's ACCUNET.com. I'm David. That's Tim. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.